If you bought a house in the last 3 years, you probably heard this strategy from maybe your real estate agent or even your lender. Realtor.com just put an article out saying that this marry the house, date the rate nonsense that was being perpetuated in our industry is starting to backfire on people. Go figure. Here's the brutal truth. Interest rates don't follow your timeline when you think they want to come down or when you feel it's right to refinance. And gambling on the future is just a crazy way to look at buying a house. You obviously don't remember these buyers that were buying homes hoping and praying they continue to go up in value, that they could flip in and become an investor overnight. My name's Sean Uehara. I've been a mortgage lender almost 20 years, and my clients learn how to beat the bank at their own game using the first lien HELOC. Instead of paying off your home in decades, we teach our clients how to pay it off in years, saving you tens and hundreds of thousands of dollars in interest. You build wealth now, build cash flow, and do all the things you dream of doing simply with one strategy. So if you want to learn how to do that, follow me and save this video because I show you ways every single day how you can beat the bank and stop listening to this kind of nonsense on TikTok or Instagram. Here's an example of what we did with one of our clients. They had 26 years left on their mortgage. We're paying it off in 7.5 years, saving them $65,000. Now, a lot of you homeowners just assume you're going to be able to refinance, but look at this chart here. You're picking up with price reductions across the country, meaning home values are going to start sliding and pulling back. So if you were somebody that bought a home and you put little to no money down, if your market pulls back 5%, 10%, guess what? Your LTV, loan to value, is not going to be high enough to refinance your home. People were lucky enough back in the day to refinance when they were upside down, but the government had to intervene and create a special program in order for those folks to refinance. And here's another problem. If you got student loan debt that you weren't paying during the COVID years and now this thing's coming back to haunt you, guess what? You start missing those payments. What happens to your credit score? It's going to tank. Or credit card debt. If you've piled on more credit card debt and now you can't pay it, maybe you're working less hours at home, guess what? You miss your credit card payment, your credit score tanks. The amount of people that bought into this is insane. There's so many factors that go into refinancing your home down the road. You still have to have the credit, the income, the loan to value, and you still have to qualify for this mortgage in order to refinance out of your 6 or 7% interest rate. So there was never a guarantee that this was going to happen. Instead of chasing an interest rate, learn to chase the right strategy. Here's another client that we're going to take out of their 15-year mortgage and I'm paying it off in 2.8 years. It's saving them $43,000. My clients could care less about the interest rate because we have a strategy that's proven to help them get out of debt quicker. So stop dating the rate and learn the right strategy that's going to get you out of debt faster and start building wealth. If you want to learn how to do something like this, send me a DM. I'll hop on Zoom and we'll teach you how to get to financial freedom faster.